the stock market is starting to look a lot like 1987. In 1987, we had a market melt up to new all-time highs. We had a market crash, and we also had a Fed pivot, all within the same year. We've also had in 1987 the highest amount of green days, consecutive green days, 13th to be as more precise, of green days, consecutive green days in the Dow Jones, in the US 30. When such phenomenon happened again, well, guess what? In 2023 we had 13 consecutive green days in the Dow, as confirmed as per last week. Guys, this is what we're going to discuss in today's video. Is 2023 the same as 1987? Because if it is, then it's something very important to be aware of. So here we have the S&P 500 from 1987. So you can see here the stock, when the stock market opened, funny enough, we are all the way, the S&P 500 was at 200. Now is at 4,600. So you can see the big difference there, that 30 years make of the stock market. So funny enough, the stock market opened up in January. We had the massive rally, same we did here. Then we had a consolidation, okay, and a slight pullback. That's exactly what we've had in here. So a consolidation, then a slight pullback, and then we had this massive rally here, two all-time highs back then in August of 1987. And guess what, guys? I mean, it looks so familiar, it looks so similar. Look at this. So we had those 3 down days here, and we had a couple of down days here, then we had more down days here, 2 days here, then we had 3 days down here, and then we had the final rally. Okay, does this look familiar to you at all? It looks exactly the same, guys. And guess what? We are just approaching August now. So it's going to be very, very interesting, guys. Now we are not far away from new all-time highs in the S&P 500. So don't be surprised if we do hit that, okay, at some point in August. Okay, if we are to follow the narrative of 1987, we should hit new highs, and the top should be in August. And then after that, guys, towards the end of the August, we had a nice sell-off, and then come October, okay, we had a massive crash. Look at that here, guys. Okay, so is this going to happen again this year in 2023? Well, we are going to find out, but it looks very, very similar to 1987. So that's why, and everyone keeps talking about it nowadays. So I said, might as well just bring it up and discuss it here on the channel in today's video. Now, guys, before I carry on, if you are new to the channel, please consider subscribing. We do bring out the latest stock market analysis outlook every single Monday morning. And if you do enjoy today's video, please give it a like. It does help us a lot, guys. Now, back to our usual chart here of the S&P 500, and here are the gaps that we have, guys. We have 13 unfilled gaps. Each blue line here, it's a gap. We have 13 unfilled gaps here to the downside. That's a lot of unfilled gaps, guys. We normally want to see some of those filled before making new highs, but lately we've just been, I mean, in the past week, we've just literally been consolidating here. We have one last gap, okay, sitting at around 4,660 or so, and we have 13 gaps to the downside here. So watch out for some of those gaps to be filled in the near future, guys. And if you are to follow the 1987 narrative, then we'll make new highs here. So fill this gap here, make new highs, new all-time highs, and then that big crash comes in later this year with some pullback, some sort of pullback in August. Now, guys, what do we have this week? We have earnings, and one of the most important earnings to be aware of, we have Amazon and we have Apple reporting on Thursday after the close, and we also have Coinbase, guys, which I think has been this morning we found out that they've been restricted from trading everything apart from Bitcoin. So it's going to be very interesting whether this company goes bust or not, because that will have ramifications on the whole crypto industry for sure. So guys, very important to watch on Thursday the earnings here. In terms of news, guys, we don't have a lot of news. We have news every day, but not crucial news. The most important ones to be aware of, guys, will be on Friday, where we have the non-farm payroll. So watch that on Friday. Now let's go straight into the technical analysis. And guys, here on the S&P 500, we are right at, today is the 31st of July, the last day of the month, and guess where we are? We are right at the upper expected move for the month. So the upper expected moves, guys, the expected moves, the upper and the lower expected move for the month have played in perfectly this month. We are right at the upper expected move for the month, which suggests not a lot of upside from here today. Okay, the rest of the week we're getting into August, and we have new expected moves for the month of August. Now what do we have here, guys? We know that the 20-day EMA here has been acting as strong support. So when do we turn bearish? Once we are able to break that support, to see a candlestick close below this the 20-day EMA. We are making new highs. I mean, we've been consolidating, looking to make new highs here on negative divergences. So something to be aware of. Now, where is the next level of liquidity, guys? The next level of liquidity is sitting right here at 4641. So if the market wants to go higher this week, guys, okay, watch the 4641 level. What's that level also coincides with? The upper expected move for the week. So if we do make a move up higher, okay, at some point this week, look for some sort of reversal, okay, once we clear that liquidity, guys. When do we turn bearish on this chart here? We only turn bearish once we see a candlestick close below the 20-day EMA. Looking at the daily chart, the hourly chart here, guys, we do have a lot of liquidity, guys, resting below this level, 4516 or so. Now, guys, I want to point your attention to one specific level, which is this level of 4500. This is a very psychological level. There's a lot of liquidity resting below this level, guys. If we come here, clear liquidity, okay, watch what happens here. Okay, do we get a consolidation and back to new highs, or are we going to get more downside pressure? Because if we see a close below the 4500 level, there will be more downside pressure for sure. That is a psychological level. If this level holds, then yes, new highs will be in play for sure. At the moment, we are right at this 1 hour IC consolidating in here. As long as we don't make new highs here, then we do have a potential for more downside pressure, especially as we had that break of structure here last week. Okay, so we do have a reversal on here, okay, for now. If we make a new high, that is invalidated, and the next target is the 4640. That is the liquidity on the daily chart. Next, guys, we have Apple, and Apple has been consolidating over the last month at new all-time highs, waiting for earnings. I have no idea what the earnings will be, but this is priced in for perfection because it's at all-time high. So the earnings cannot and should not disappoint if Apple is to go higher here. When do we turn bearish on this? Once we break the 20-day EMA, once we see a close below that. Okay, we haven't seen a close below that since March, guys. Okay, and that is big. So watch for a close below that. Watch for earnings for Apple on Thursday after the close. This is going to be crucial for Apple and also for the stock market in general, because if the biggest company in the world, okay, disappoints, and if the biggest company in the S&P 500 disappoints, which is Apple, okay, that doesn't look good at all. Next, guys, we get the UK 100, and we discussed this last week that we talked about the potential to move up higher here. Now we do have a break of structure, so I'm looking for price to either come back into this IC and then take out this liquidity, or just simply take out the liquidity first. We are consolidating here. If we are to go into a 4-hour time frame, I don't want price to be honest, I don't want price to close below this IC for now before taking the top liquidity, guys. So watch this IC here. As long as we don't close below that, there is a certain possibility here to go up higher. We do have, okay, an inverse head and shoulders that had played out quite nicely from here. Okay, watch for that top liquidity on the daily. Next, the DAX. The DAX is at all-time highs, and this is what we discussed in the last couple of sessions, guys. I discussed about they've left this liquidity here very clean. So I said, if we do see more downside, I want this to be taken. That's exactly what happened. We 100% smashed this call, guys. Now we are making new all-time highs here on the weekly on negative divergences. Okay, so that is not positive. However, guys, okay, this looks bullish. This chart looks very bullish. Okay, so when do we turn bearish on this? We need to see some sort of break of structure first. If we are to look at this chart here, we haven't had a break of structure here, clear break of structure. So I'm looking at this level here for price to break this level, come back, and then we may potentially get a short from there, okay, into first of all clearing that liquidity, okay, sitting at around 15,990, and then the next one, which is very clear here, guys, 15,657 or so. That's very clear liquidity that price may want to target next. Upside to the moon. Okay, we are at all-time highs. I have no idea how far this can go, guys. Okay, and I think no one knows. Okay, so don't try to fight it. Don't try to short without a signal, and the signal should be that break of structure, guys. Okay, next we have US 30, the Dow Jones, and guys, here, as discussed previously, I was looking for this daily liquidity to be grabbed, and that's exactly what happened, guys. I said we were talking last week in the video, and we said that we are so close to clearing it. Okay, might as well just clear it before we see some sort of pullback. And that's exactly what happened. Now, guys, be very careful on this. We are consolidating here. Okay, however, okay, we are very close to what? To new, okay, to this level of liquidity. And if we grab this level of liquidity, which is very clean, guys, very, very clean, sitting at around 35,829 or so, the next level of liquidity after this, guys, is all-time highs. So don't be surprised if that happens. Okay, perhaps Apple beats earnings and forecasts some sort of magical numbers for the future. Well, I think that can happen. Okay, so don't be surprised if we see that happening. This market has been really crazy this year. Okay, however, the fundamentals I've discussed don't matter at all this year. Okay, because if they did, we should have had a massive crash by now. Okay, especially with interest rates in the US at 5%. Now, guys, very important here. We've cleared that liquidity. Okay. We've had a break of structure, okay, and we are back in here now. Now, if we are to see some sort of a reaction, okay, we need to see it now. I don't want us to make new highs here. As long as we don't make new highs, there is a possibility for us to go back down and grab this liquidity, sitting at around 34,931, guys. Apologize for that. So there's a potential for going down to clearing this liquidity there. If we do make a new high, guys, then watch for the liquidity all the way back up there on the daily to be grabbed next, and then look for some sort of consolidation, break of structure, and then perhaps coming back to clear some more downside liquidity. We did have a massive run here, guys. Okay, and as it stands, this looks still very, very bullish for now, guys. Okay, next we have US 100, and here, guys, we are inches away, okay, from clearing this liquidity right here, guys, sitting at around 16,046. If we clear that and go higher, the next liquidity is at new all-time highs. Okay, so watch out for that. We've discussed in previous videos, when do we turn full bearish on these guys? Okay, once we are able to close below the 20-day EMA. This is strong support, and even last week, guys, we had strong support. We are not seeing signs here of a turnaround just yet, guys. Okay, if we do make a new high here, we will have a new high on negative divergences. Again, we are making new highs here, and the bread doesn't seem to be that great. So be careful, going long at those levels. Again, you can play it tactically, okay, on smaller time frames. And if you are to look at a smaller time frame, guys, when do we turn bearish on this? Okay, we need to see a break of structure starting with the 4-hour time frame, guys. You can see here, we're making higher highs and higher lows, higher highs and higher lows, and we need to see a break below this level here. So if price fails to make a new higher high here, and we break below this level here, guys, below 15,370, we see a close on the 8-hour on here, then we do have a potential of moving lower to clear some more liquidity areas, with the target for now being 14,210, this level here, guys. If we do make a new high, okay, then watch here, the liquidity, it's very, very close here. So here on the daily, watch for that level, guys. Okay, so if we do make a new high, watch for the liquidity. If price keeps going higher than that, then new all-time highs. Don't fight it, just new all-time highs. Then we reassess and see where we are. Next, we have the VIX. Now the VIX tried last week but failed to close above the 15 marker here, guys. The VIX is the volatility of the S&P 500. Measures how the volatility for the next 30 days. Now we do have two gaps. Now we open today with a gap, and what's the story? Open up with a gap, go down to close the gap, and the S&P 500 just rallies. That's been the story throughout 2023. Are we gonna get the same this week? Perhaps. Okay, watch for this gap to fill, and then maybe we get a spike. Now what we need to watch for, a close above the 15. We had a go at it, but we did not manage to close above. So we need to close above and then carry on or continuation above, not just the close above, but also continuation above. Next, guys, we have the DXY here. Now the DXY, guys, is starting to look bullish, with the next target being at 103,760 or so. Why do I say it's starting to look bullish, guys? We had our nice double bottom here to clear liquidity, and now we are making higher highs and higher lows, higher highs and potentially higher low here, with the target, as I've mentioned, being all the way up here to clear that liquidity. As long as we don't close below this level here, 100.5, then I can see us going up higher to at least take that liquidity. This looks very bullish, guys. Don't fight it. We have left clean liquidity here, so at some point I wouldn't be surprised from us coming back and clearing that. Okay, can be this week, can be in the future, guys. We have to wait and see. Okay, next we have gold. Now gold is just ping-ponging here between those two levels. It hasn't really done much, okay, especially the past week. Now all I want to see in here, I want to see a strong firm close either above this level here, being 1989, okay, or below this level here, guys, being 1902. Anything in between here, I'm not interested. Okay, so that's why we set up those alerts. We wait, see what happens. Lastly, we have Bitcoin. Okay, the Coinbase investigation does not help cryptocurrencies for sure, Bitcoin as well. However, guys, we haven't been doing anything here for a number of weeks now. We are looking for price to either close above this level here, okay, previous support turns into resistance, so we want to see this resistance break, okay, which will give way to more new highs and more liquidity being targeted. Okay, if that doesn't happen, then we are looking for price to retest, especially at least this IC sitting at around 26.7 or so. That's pretty much it from me, guys. Okay, be careful out there. There's a lot of volatility. Any bad news can be a catalyst for a market crash. If that doesn't happen, then the market can just rally to new all-time highs. Okay, be very careful. If you are interested in our strategies or learning more about the strategies that we use, feel free to go over on to our website, mcitradingacademy.co.uk, and where you can find out more and inquire if you have any questions. Thank you very much, guys, and I hope you have a great trading week there.